But I would like to start with Alain, who's here from DG FISMA, to kind of give us a little bit of a context as to what is meant by European data spaces more generally, and then maybe a bit more specifically around corporate information.
Thank you very much, Nick, and good afternoon to everybody. I hope you can hear me correctly and see me correctly. So let me start by unpacking the various layers of policy within which this work on the European financial data spaces, but the financial data space, which is what occupies us in particular in FISMA, is located. So the starting point, of course, is the strategy for digital Europe, the EU data strategy from 2020, which has a number of components. Talks about governance, but if you dig down into that, you will see there a reference to European data spaces in a number of strategic sectors and domains of public interest. And there's a whole list of them given in the European data strategy, one of them being the European financial data space. Now, the next layer of policy is the digital finance strategy that was also adopted in September of last year. And that again contains a number of components. But one of them indeed is the creation of a European financial data space, although there are linkages between this particular priority of the European digital finance strategy and other priorities, such as tackling fragmentation in the digital single market, and that is going to be particularly relevant when I come to the European single access point in a few minutes. So that's kind of the second layer of the policy. Now, if you look at what is actually in the European financial data space, I'm going to repeat to a certain extent what Commissioner McGuinness already said, but there are a number of different elements within that financial data space. One of them is the component that my team in particular is working on, which is making sure that information disclosed by companies and financial entities is available in a standardized and machine readable format across the EU. And that is really the European single access point is pretty much what we have in there. Secondly, facilitating supervisory reporting and using innovative tools for supervisory reporting, so a RegTech angle. And then the third element we can maybe call the open finance, largely based or building on the work that's already been done in the Payment Services Directive, which is of course also part of the Commission's broader data strategy. Now, so that's the kind of big picture of the financial data space, how it fits into the broader policy framework and what it is made up of. Maybe I'll take the opportunity here to already say a few words about the European single access point, which in my view it has a lot of potential and is potentially pretty transformational for the single market in financial services and the capital markets union. And of course the SAP is embedded within the CMU action plan that the Commission adopted again last year. And but it is not only linked to the CMU. It has touch points, obviously, with the European data strategy and digital finance strategy, which I've already mentioned, but also with the sustainable finance strategy, since one of the very strong demands we're hearing from the investment community and the financial sector more widely is to have much easier access to high quality ESG disclosures from companies. And partly that is driven because we've subjected a number of financial entities to disclosure requirements linked to ESG requirements, and therefore they need to be able to access on one hand easily, but also on the other hand high quality data in order to be able to fulfill those obligations. So the SAP contributes to a number of different sort of policy priorities that we have in DG FISMA. And in order to make all of this understandable, I'll maybe just very quickly say what it's all about. The basic problem, there are two basic problems that we're trying to tackle through this project. First one is that we have required companies and financial institutions to disclose a great deal of information in various pieces of legislation. When it comes to capital markets, most of that is covered by the Transparency Directive, but there are various other pieces of legislation that are relevant in this context. Banks disclose Pillar 3 reports, insurance companies disclose solvency and financial condition reports. Now, a whole range of financial market participants are also subject to disclosure requirements under the Sustainable Finance Disclosure Regulation. And unfortunately, what's tended to happen is that in each one of these pieces of legislation, we've dealt with the disclosure mechanism in a rather ad hoc way. And the result of this is that information is published on websites, on national registers, in European databases. It's not always freely accessible, so there are registration requirements. Sometimes you have to pay for it. And all of this entails additional search costs for users. So you can, of course, go to commercial data aggregators, but they're not for free. And for some, in particular, smaller investors, those costs can be, perhaps in some cases, even prohibitive. So the first objective of the SAP is to provide an interface through which all the information that is disclosed by companies and by financial institutions that is relevant within the scope of this project can be easily accessed. I'll say in a few minutes what this does not mean that we're creating a single database, but I'll come back to that in a minute. Second objective that we're dealing with, or second problem that we're dealing with, is that all of these reports and data and information is disclosed in a variety of different formats. Often it's not particularly user-friendly. There are still even, believe it or not, documents that are being disclosed as kind of image scans, which is probably the least user-friendly format that we could possibly imagine. But many of them are disclosed in PDF or other formats. And there's no generally agreed structured data format for use in all these disclosures. We have taken this step already for financial statements to move to what we call the European Single Electronic Format, which is a combination of XHTML and inline XBRL. And that is coming online for the first time this year. So there are a number of companies that already this year will disclose in their financial statements in SF format. Some member states will delay that in light of the COVID kind of related operational difficulties, will delay that until next year, but it is coming online. But that is the only example we really have at the moment where disclosures are made using a commonly agreed structured data format in Europe. So that I think has the consequence that again, this information is more difficult to process. It's generally not machine readable, and that again increases costs for everybody. Information has to be rekeyed if you're a data aggregator. Often, sometimes you can get it in a structured data format because somebody somewhere has already produced this, but it's certainly not the rule. The overall consequences of all this is that this lowers the attractiveness of European capital markets, and this is particularly detrimental in our view for SMEs and smaller or less developed capital markets in Europe. So what are we trying to do with the SAP? First of all, we're trying to provide a kind of a seamless access to disclosures across the EU. As I was saying, the second objective is to enable digital use and machine readability of information, and the third is to remove barriers to access to information, and perhaps even moving all the way to an open data model. And all of this should, in our view, contribute to improving allocation of capital and enhancing or promoting market integration across the EU. I mentioned before that ESAB is not, in our view at least, meant to become just the creation of a single big database. What we are trying to do is build as much as possible on existing European and national IT infrastructures. This reduces costs, it limits process changes for companies. And so what we're trying to do is to federate information that is available in various registers, databases, websites, and so on, so that to the user it looks like a single database. It logically appears like a single database, although behind the hood or under the hood, it's actually a distributed storage model, but the user doesn't need to worry about that. From the point of view of the user, it's going to look as if it were a single database, and through whatever interface the user chooses to use, you should be able to get all the information you need. The scope of the information that we're targeting is mainly information relevant for investors and capital markets, but it can also be broader, and in some times the same information that's relevant for capital markets participants is also relevant for civil society. ESG data would be a good example of that. Thirdly, I want to be very clear, the purpose of ESAB is not to create new or additional disclosure requirements for companies. We're focusing on making information that companies already required to disclose, already disclosing, available in a digital format. So this will not replace existing databases, whether it's at national level or European level, whether it's, an example might be BRIS, which interconnects business registers. Again, a fourth and final clarification, there is a difference between what we're doing and what's being done in the area of supervisory reporting. We're focusing very much on information that's disclosed to the public. That's generally not the case for information that's reported to supervisors. So that's kind of the dividing line between what we're doing on ESAP and what's being done on supervisory reporting. I'll stop there, Nick.
I do appreciate setting out the broad concept and then applying it specifically to the ESAP approach to explain how it works for one of the three pillars that you said, in this case, corporate information, the others being supervisory information, and then the open finance piece. I think I would like to pass over, and I think I should say, kind of, I want to explore these data space ideas for a little bit and then move to what are some of the barriers and what are some of the, building blocks to facilitate the exchange of information. And anybody who would like to ask questions, please feel free to use the Q&A function as well, of course. But with that, I would like to pass over to Stephan, because Stephan, you're exploring this in a partnership in the land of Hesse, and be interesting because I think it's kind of given a sense of what these data spaces could look like.
Okay, excellent, thank you. In fact, we faced a similar problem, which was just explained, and we think in Europe, we face the problem that we have a lot of data silos in the supervisory institutions and financial institutions and academic institutions, but we don't bring them together to form a big data basis for analysis or AI application. And therefore, we decided to bring academia, supervisory institutions, and private actors together and to form a project which we call the Financial Big Data Cluster, where we try to bring those silos from supervisory data, academic data, and private institution data together under the legal requirements rolled out by the EU and nation states, of course. And this project is part of the European Gaia-X project. Gaia-X is the idea of European governments to form a system of data spaces that is open to everyone and avoids the lock-in for its users. France, Germany, Italy, and many other countries are participating in this initiative. It is thought to have a common standard for everyone who is bringing in its cloud or IT or application services, so that they are all of the same standard, and users can move within the Gaia-X framework freely with their data in so-called containers. So what we did, we brought together a consortium of players, international players from US, also Europe, everywhere, who are now exploring how we can build up such a data space infrastructure. And we were told, start from a basis, start from the application, start from use cases. So we defined some use cases with topics like sustainable finance, like anti-money laundering, measures like market integrity, and many more, where we decided what kind of data sources do we need and what are the legal requirements to bring those data together for an AI analysis or whatever analysis the user wants to apply. And the topic here is that in the end, we will have to find out whether the restrictions under European data protection and financial market regulation on the one hand, and the requirements for AI analysis can be brought to a good equivalence. Because the more you must synthesize, aggregate, or modulate the data you bring in such a hub, the less use you will be able to make out of these data finally. And so this project will be a test case whether European regulation in the end is still making it possible, the European way under the data regulation, by synthesization to make use of big data and AI application and to make Europe competitive with other continents in the world. We think that this is highly important because there are different developments taking place at the moment. The one is the whole finance industry is moving into the cloud step by step. This poses great challenges for regulators and the finance industry to make data secure, to keep it secure, to keep the control on it, and also to improve the use of those data. This step has only begun, this development, and it will be really far-reaching, we think. And second, of course, the big data space providers move also now step by step slowly into the finance business area. So the traditional financial institutions will face sooner or less, to a certain extent, more competition from outside the classical or traditional financial sector. And as they still keep a lot of data but cannot make use of it, it's only natural to understand and see how finance industry could be allowed to make use of those data under the current regulation. And so, in fact, what we see is we will see a great transformation of the finance sector, which has only begun by now. And the question is whether the finance institutions themselves are able to master this transformation, or whether they will be be taken over by the technology and data space providers. The idea is with Gaia-X not only to of course focus on the finance area, but to also include many other areas: automotive, mobility, pharmaceuticals, many more. And we hope that we will also see cross and spillover effects with these other industry sectors, because if you, for example, want to apply pay-as-you-go production models or payment models, for example, for the car industry Europe-wide, you can make a lot of use also for these industries within a finance data space. Maybe that is for the introduction of this project enough.
Very much indeed. That's a very helpful context. I would like to pass over to Coen just to finish on the policymaker side, so to speak. Coen, of course, from the Dutch Central Bank. I know you've been starting to think as well about some applications of data cooperation and data spaces. Maybe you would like to elaborate on that a bit, Coen.
And thank you for having me on the panel and to discuss these very interesting and important topics. And I actually agree with a lot that Alain and Stephan have already said. I think that data spaces and data sharing can be very powerful tools for resolving specific problems, especially where data is lacking and where data is fragmented. And I think Stephan just pointed out a couple of areas and examples. I think with these initiatives, and that's true of data spaces, but also of open finance that we'll be speaking about later, I do think it's important to keep in mind always what the problem is, how we can add value, and also what are we actually talking about. In this panel, obviously, we're talking about financial data spaces and about mandatory sharing of financial data under open finance, but it's not necessarily immediately evident what financial data actually is, what it constitutes. After all, any type of data could potentially be useful in financial services, could potentially be used in the financial sector. And I think Stephan also gave a few examples of that. Let me give you another example, and that's also to your question, Nick. In the Netherlands right now, we are considering researching whether it would make sense to set up a national financial data space to help support SME financing. And obviously, in such a data space, we can, we can use traditional financial data, such as, we can bring together data from loan level data from ECB databases, or information on a company's annual accounts, or data on assets and collateral. And of course, if you bring all that together in a data space, and with the consent of the data owner, make it available to potential investors or banks, that could obviously help reduce financing costs. It could help boost SME financing. It could help create new financial products. But I think something to bear in mind here is there's no particular reason why, for instance, IoT data or any type of other data could not potentially also be useful for for such a financial data space, or for investors. And that goes to, I think, a broader point that I'd like to make, which is that especially when we're regulating, and for instance, under open finance, I think it's very important that we keep thinking about what problem are we trying to solve? How can we maximize the value of these initiatives, especially also for end users and consumers, and then shape the initiatives and regulate accordingly. And I think if sort of inadvertently or by default, we end up in a too narrow or too sectoral approach, or we, for instance, take too narrow a definition of what financial data is, then inadvertently we might also end up limiting the benefits of these initiatives for end users. And for us as a central bank and a regulator, I think the added value for end users is really key. I mean, what we are seeing from, for instance, PSD2 surveys is that one of the reasons PSD2 has never really taken off is because the propositions and products that were created with the data that was being shared simply didn't have, on the whole, enough added value for the end user. And I think there's a bunch of lessons in that as well in open finance, that if we really are trying to spark innovation and competition in the financial sector, if we really want to enable a shift in the financial industry towards open business models and new innovative embedded products that can also have a lot of value, then around open finance, I think we should critically consider whether a sort of narrow sectoral approach to data sharing, with perhaps a limited definition of financial data, a limited data sharing mandate, no reciprocity, etc., whether that really adds sufficient value, or whether we should rather consider putting in place a broader principle of data sovereignty and data reciprocity, and then combine that, so data reciprocity and data sovereignty in financial services, but perhaps also beyond, and then combine that with very concrete work on standardization of various elements of data sharing, such as technical, governance, functional, but also consent management, etc. And that kind of horizontal work on standardization could then also link to other initiatives, for instance, the data sharing provisions under the Digital Markets Act, or industry initiatives on data sharing that are now emerging. And to wrap up, to close with the financial data spaces, I think it's similar there. I think to maximize the value of those spaces, interoperability is key. And we, for instance, had some discussions on that as well at the Commission, about how we could, for instance, link national financial data spaces to, for instance, European single access point. And I think that's also a key area. So just to conclude, I think for us, it's really key to focus on what are the problems that we're trying to solve, how can we maximize the values of these initiatives, and then shape them accordingly, and also try to avoid too fragmented an approach to data sharing.
Thanks, Coen. I think it's very interesting what you say, the kind of tension between a narrow data sharing experience, which we've seen in the consumer space, which might or might not have brought sufficient value for all the effort we put into it, compared to a much broader data sharing, thereby much bigger pools of data can be used, but then the complexities of bringing different sectors in and kind of what we discussed with José Manuel a bit earlier, parameter control of what financial supervisors should do or other supervisors should do, what the overall framework should be in the cross-sector context. I would like to come back to that, and I think maybe start with you, Mounaim, in the sense of you've been involved in the implementation, design and implementation of PSD requirements, which has been, and the Commissioner mentioned it this morning, really the beginning of open finance in Europe. Would you share Coen's assessment? How did you see this evolve? Has it brought benefits now application of a data space?
Yeah, thanks for that introduction, Nick. And thanks for having me. So I definitely subscribe to the points that Coen made. I mean, if we look at Europe and PSD2, it is a relatively narrow scope of the financial data that is being exposed. It's only the financial data on payment accounts. In some other countries, it also involves savings accounts and credit cards, depending on the interpretation of the regulator. While in other countries, just as an example, if you look at Australia, for example, they have taken the reversed approach. They basically say, we provide customers with a general right to control their data. And the first application of that general right is in financial services. And apart from financial services, that right will also be applicable in other sectors. And I think that is a more fundamental approach to really drive the value of the sharing of data and to basically also enable innovative use cases and solutions for customers. But maybe back to Europe and to PSD2. I mean, if we start off with the general benefits of sharing that financial data, some of the pros are, of course, that customers have more choice in financial products and services that they can choose from, as there is more competition and more innovation in the financial space. Next to that, they have better access to more high quality and personalized products and services at competitive rates. But some of the cons that we have witnessed are also like the fear for the misuse of that financial data. And even worse, potential leakage of sensitive information. And just to build up on that last point, on those drawbacks that customers basically perceive, not that it really happened, but it's just a risk that they perceive in sharing financial data. And that is basically also withholding them to share that data at scale with those innovative service providers that have emerged in the financial space here in Europe. And I mean, well, the data sharing, well, maybe one step back. If we look at those customers and if you ask them with whom are you willing to share your financial data, the primary answer is that they are willing to do that with their financial service provider, being their bank, rather than with any other provider. So if you look at one of the objectives of PSD2, it was to stimulate innovation and competition. But what it rather has done is maybe reinforce the position of incumbents rather than to stimulate those newcomers. And obviously, there are all kinds of demographic variables that you can take into that equation to determine who customers are willing to share their data with. But nevertheless, the traditional financial service providers are the ones that are mentioned most often, basically. And if we then look at use cases and value add, there are some specific use cases that are emerging around financial management, personal financial management. That is the primary use case that we see that basically leverages account information on your payment account to enable financial dashboards, to enable smart budgeting and all kinds of subscription management, to allow use cases around automated savings, automated reconciliation, accounting, and tax, for example, for small and medium-sized businesses. But other than that, the use cases are not really innovative. There are all use cases that were already available on the market. based on data that was acquired through different means. And now it's just brought under the regulatory umbrella of PSD2 with a more secure way of having access to that data. And I think one of the last points I want to make is, in terms of adoption of these services, there is really an important action that needs to be taken in terms of informing and educating customers about the benefits of data sharing and how it actually works. And for that to happen, we need to align the incentives in the ecosystem in order to do that and to create awareness at scale. Because if you look at PSD2, it was basically perceived as a way to force banks to share their data, to open them up, of course, with the consent of the customer. And the banks were not allowed to charge for that access. And they had to make a lot of investments in order to meet those compliance obligations. And because of that misalignment between the incentives in the ecosystem, we also saw that banks did not really communicate about the benefits of PSD2 towards their customers. And in fact, if they did communicate, it was mainly to stress the risks of sharing the data with third parties rather than stressing the benefits. So I think the main learning point here is, apart from having solutions and use cases that truly add value to customers, both retail customers and small and medium-sized enterprises and even corporate customers, we need the data sources, so the organizations holding the data and providing access to that data, to be also involved in promoting data sharing under their respective customers in order to drive awareness at scale, and ultimately to also facilitate the adoption of new data-driven services.
No, thank you very much. I think it kind of unpacks some of the comments Coen made about the value. And I would love to switch over to Jeff, who's joining us from the States, because the US, of course, has, and we've heard this earlier today, data aggregators in this market already. You've moved in a way in the market model towards open finance much quicker than Europe. And I just wanted to ask you about your experiences around this and also some of the ongoing work that is being carried out at the moment at the agency level around this.
Sure. Hi, everyone. Thanks, Nick. I'm Jeff Brown. I work for the Charles Schwab Corporation. And for those of you who don't know that company, we're a very retail-oriented financial services company with over $7 trillion in client assets under custody, 30 million client accounts. So you can see our focus is on the consumer. And so in the US, it will be 11 years since the Dodd-Frank Act was passed by Congress and signed into law. It granted consumers access to financial data, and it set up the Consumer Financial Protection Bureau, CFPB. And Section 1033 of Dodd-Frank specified that the CFPB was to set up and create regulations governing this whole area of access to financial data. And yet, to date, nothing's been written. The CFPB issued a set of principles in 2017, and then this last fall they put out an advance notice of public rulemaking, which in which they asked a lot of questions, and the response is actually due this Thursday, and you'll see that the industry will respond answering those questions. But the regulatory scheme is long away. I mean, it will take over a year for them to process and develop a set of regulations. But the marketplace, just heard, whether it's Europe or Australia, the marketplace didn't stand still. There's been dramatic growth in providers of consumer products and services in which their data is shared. And whether that's payments, personal finance, you just heard, advisory services, credit profiles, to name just a few. There's an extraordinary, and they're growing and changing and innovating all the time. And as a holder of consumer financial data, we saw a clear need that there needed to be enhanced security, standardization. The method of access was credential sharing. And that in itself creates tremendous risk. This idea of screen scraping, where the client gives the aggregator his access credentials to the financial institution. The institution has a very difficult time determining whether it's the client or the aggregator entering in. And it's a crude tool where the aggregator can take whatever it finds within that client account, regardless of what instructions it had been given as to authorize data. So, and then that creates a risk of storing credentials with third parties, with fourth parties. And because if there's a breach, the client risks not only his credentials being stolen, but access to his accounts at a financial institution. So clearly there was a need for change. And standardization or enhanced security doesn't necessarily mean government regulation, because what happened was the industry came together in 2018, and there was an organization called Financial Data Exchange created. And FDX is a market-led effort to develop standards of access that will enhance controls and security. And this organization is comprised of participants from the whole ecosystem of data, financial data, from holders, financial institutions, aggregators, users, consumers. And so, firms that compete with one another, firms that are cooperative with one another. And by bringing all this together, we are able to formulate a set of standards that can really develop, for example, the API access point. Now, that's been, that FDX has done a very good job of developing this. We're now implementing these API access with aggregators. Some of the stumbling blocks will continue. Contracts. You have to enter into contracts with your aggregator, and those can take a long time because we at Schwab, for example, will require some responsibility for security of the data that they're aggregating. We'll want to know about what are their protocols. And so these things will have slowed the process down of implementation. In some instances, firms agree, in others they don't. So there's more to be done with respect to that. And we're seeing innovators come into the marketplace that will solve some of these problems, provide legal, technical, and service to smaller financial institutions that may not have the resources to negotiate these contracts. And so I think what we're going to see is, again, market-led efforts to solve the problems. And what we're concerned about is, where will the regulator, when next year they issue a set of regulations, where will they come out? And I think there is some concern that will impede innovation more than it will, because once you have a set of regulations, things become more static around those regulations. And so a market-led effort, however, is more agile and able to modify or amend what it's doing to meet market demand. So I'll pause there, but happy to discuss this further.
Thank you very much indeed, Jeff, for the perspective from the US and also about the initiative there. And also, I think importantly, what you focus on, the private kind of sector alternative to information exchange and development of APIs. With that, I would like to pass to James and move kind of in a way from the retail to the wholesale side, if I can say that, and maybe full circle to Alain's initial comments about data spaces in a broader sense of sharing of data, Coen's second kind of concept of wider use of data and sharing of data. How do you see that, James? And also, given kind of AFME is very much tied into the global initiatives, you represent global companies. How do you see the European Data Initiative fitting into global capital markets?
Yeah, hey Nick, everybody. So I think there's been some great points made by the other speakers, but as you say, a lot of it tends to focus in the retail space. And I want to just take a step back and think about it from a wholesale markets perspective. I think, as Coen was saying, what is it that we want to achieve here with data? Obviously, even in the wholesale space, there is a huge amount of information that flows. You know, we want to maximize efficiencies from a wholesale perspective. We want to minimize errors, reduce fraud, manage risk better, all those good things at the same time as providing innovative services, look at new products. So the question is, how do you do that? What data can you do you want to be accessing, et cetera, et cetera? And in the wholesale space, that tends to be sort of the data around companies, around money laundering, around KYC, et cetera, that sort of data, and increasingly ESG, you know, you name it, all of those sort of key underpinning types of data. So I think first question is, our first point from me, and I've got 4 or 5 key ones I'd probably like to make. Data sharing initiatives in Europe need to be cross-sector, you know, to fully maximize those benefits. So what is financial data? We tend to not think about open finance, more about open data, because, you know, there is a lot of data generated outside the sector, outside the financial services sector, that would be used or could be used to enhance financial products and services. I think that's point 1. We need to be thinking about open data. I think data sharing initiatives need to be coordinated across the European Commission directorates. I mean, if you think about, you know, you've got DG FISMA, DG Comp, DG Connect, DG Just, et cetera, et cetera. So unless we have joined up thinking and joined up sort of approach between those, you know, you've got the challenge that you may have multiple sources. I've worked in data quite a long time, and it's always remarkable how the same piece of data can be stored differently, reported differently, and then consumed differently. And so if we want to have these common data spaces, and interesting to hear Alain's point around, you know, not creating a central database, but rather than creating a sort of a portal, and I hope I haven't misquoted that, Alain, but I think that was the general gist, that we're going into these different data pools to pull it all together. I think we need to think about how we're going to be sourcing from the underlying data. That brings us to a very important point, which is data needs to be standardized. You need to do that in standard formats to enable greater data sharing. We talked a bit about ESG. If we're going to have standard disclosures around ESG, we need to have standards about how that data is reporting, because really APIs can only read data that's in standard format. We talked about machine readable, but it needs to be pulling through the right channels of an API. I'll give you a good example. We have worked, and I realize this is supervisory data rather than sort of underpinning data. If you've lived through, and Jeff mentioned it, Dodd-Frank, EMIR, MIFID, and all of the other versions of the G20 Pittsburgh derivatives regulation and the data reporting, I can tell you that the same thing has been interpreted multiple times and in legislation been done multiple different ways. And so, you know, in Europe, when you're reporting data to 2 different trade reporting databases in 2 different formats, and then those databases don't talk to each other, I can tell you there are problems. And so unless we get that data architecture right, frankly, we won't get all of the benefits that we've talked about and that we all want. I think then data sharing needs to be the same for all market participants to encourage competition. So you need a level playing field for this. So data needs to flow backwards and forwards, reciprocated, et cetera, et cetera. So, you know, I think that's at the raw and observed data. I don't think we're talking here about created data, because that's the innovation that we want to see, even in the wholesale markets. But I think that raw data needs to be able to flow backwards and forwards. And we get the joke, you know, we need to be protecting firms' IP where they have created that value add. That's fine, but the underlying data needs to be reciprocated. And then finally, and I've touched on this a little bit with things like trade reporting, et cetera, data sharing has got to be cross-border and global. So I think that as we enter some of these new areas that really could benefit from it, AML, financial crime, KYC type data, et cetera, those are areas where you can see real benefits around this ESG data, et cetera. Well, all of those things we talked about, standardization, taking a global approach, standard taxonomies that everybody agrees to and reports in the same way, those are all going to be needed at a global level to bring all the benefits that we talk about. Otherwise, what we end up with is small cottage industries of data in certain locations that don't talk to each other with none of the benefits. And so we have to get that right to get the long-term benefits. and for it to be scalable and interoperable. So those are sort of key building blocks that I would put out there for supporting this whole sort of data space area. It obviously has huge potential benefits, but we need to get that data architecture and the rules that govern it right, Nick.
Thank you very much indeed, James. And also for kind of moving us a little bit to the next section, which is kind of what would be the building blocks, or what are the barriers for making these spaces a reality. Just before I come to that, there are a few questions that came in. Not surprisingly, most of them directed at Alain, so I will kind of bring him in. One question came, by the way, from Christian Hess on connecting different clouds and cloud technology. On that one, I deferred to the session tomorrow evening with Thomas Coen, the CEO of Google Cloud, which is all about that. So, hold off on that particular one. But the two questions, Alain, that came in are interesting. One is, it builds directly on what James just said, but from a different perspective, which is, even if you have this portal and you manage to have all the standardized data, because the underlying financial services regulations require slightly different things, coming to James's point about EMIR and so on and so forth, and the MiFID and the interpretation around that, we still might not end up with standardization. So the question is, do we then need to reopen all those pieces of legislation to streamline the reporting requirements? And the second question, which is I think a bit more simple, is the initiative you're proposing around corporate information effectively Europe's answer to EDGAR, so the database which is run by the SEC in the US? Alain, maybe you want to respond to those and anything else that you've heard so far.
Well, a lot of very good points have been made by other speakers, and I think that the list that James went through is something which speaks to me very much, and other kind of principles that we're also looking at in the work we're doing on ASAP in particular. On those two questions, the first one on how do we get data that's essentially, if I understand correctly, and it's certainly the way we would speak about this in the field of financial reporting and even now non-financial reporting, is how do we ensure comparability, right? Is the information we're getting from different sources actually talking about the same things, and does it mean the same things? So that has a technical aspect, but it also has a normative aspect. It's very clear in the field of ESG reporting, there is a clamor at the moment for standardization at this normative level, because different people use different frameworks and standards to report. Even if you made all that data available through a single portal or even through a single database, you wouldn't be able to extract the same information from the report of company A than you would be able to extract from the report of company B, because they're just not using the same reference frameworks, right? And so you can't have a common taxonomy because there's no standardization. So that is something we're addressing, for example, in the field of ESG reporting or sustainability reporting in the review of the non-financial reporting directive, where we think there is, well, it's not just us who think, we've seen through our public consultations that there is a clamor for moving towards common standards. That then allows you also to define a common taxonomy, and that then allows you at a technical level to ensure that information can be tagged and therefore can be used in particular in the ways that James was referring to. So that's one example. We have a similar example in the field of financial reporting, where I mentioned SF before. That's based on the IFRS taxonomy. So for those companies that report on the basis of IFRS, it's already possible to do that in Europe. If you think about legal entity financial statements in Europe, generally those would be based on national gaps. And there you run again into the problem of comparability, because there isn't a common taxonomy that you can really build, because all of these things are done in slightly different ways. So it's a very good point. It's more problematic in some areas than in others. In areas where harmonization at European level is already far advanced, this is slightly less problematic, but it's certainly an issue. On the second question, is the ESAP the Europe's answer to EDGAR? Well, I would actually say no, it isn't. And I get very upset when people talk about this as the European EDGAR. We're not actually trying to solve the same problem. In the US, there is, it's one jurisdiction for capital markets purposes. Canada is not, but the US is. So there's a single set of rules, and you can feed everything into a big database. Europe is based on a multi-level governance model. And so the problem we're trying to address in Europe is how do we ensure that data that is subject to different levels of governance can nevertheless be used in a coordinated and seamless manner. And that multi-level governance is not just a national versus European, for example, but it can also be different for different sectors. So that's the issue that we're trying to deal with the SAP. Of course, the end result, as I said before, is that hopefully we come up with something that to the user looks like a single logical database, so they can interact with it as if it was a single database, as EDGAR is. But that is not, that is under the hood, as I said before, that's not how it's going to work, because the governance context and the legal context that we're facing in Europe is different. So again, there are similarities, and one of the points that James also mentioned was that data sharing should be cross-border and global. Well, I think the model we have in mind for SAP would lend itself to being globalized, if we want to look at it, if we want to talk about it that way, in the sense that because it's based on a federation approach, we could add different bits to it, right? And so you could have a sort of a European single access point that could grow into a global single access point, where again, under the hood, it would still be a distributed storage system, but to the user, it would look like a single logical database. That is something which technically is certainly feasible. Whether there will be the legal and or rather the political will to do that is a different matter, of course.
I mean, maybe one really small follow-up, because I think you called it an access point, James called it a portal, but ultimately the data needs to be standardized to be useful. And I guess that's where the question that came from Coen comes in. Even if it isn't a single database, if you just link different sets of data together that are not comparable or standardized, as you say, then the whole project fails. And that's where the whole question with a global federation becomes even more of an issue. Wouldn't you say?
Well, that is part of the legal and political challenge that we face with that kind of approach. Now, if you think about it, again, depending on which particular category of data or information you're talking about, this is a more or less severe problem. If you think about financial information, for example, financial statements, many countries around the world use IFRS. So to the extent that is a problem that's already solved to a certain extent, US doesn't, Japanese is still optional, in Japan it's still optional. But even, I think even if you don't have fully standardized data and you still make it available through a seamless interface, you're still doing some good, because you can also, a number of years ago, I was involved with the introduction of the E-Invoicing Directive in Europe. And there, at the time, there were a whole range of standards for e-invoices, but you can map between different standards, right? So if you can do that kind of mapping, provided the data is available in a structured format, then you're doing some good. You're not doing as much good as you might want to do, but you're getting part of the way there.
I had with Lisa about just now about raw data, having access to raw data, and allowing companies or specialized service providers to then make use of that and provide that as a service. I see where you're coming from. I would like to, in the last 15 minutes or so, come back to the point about barriers and kind of building blocks. And I would like to start with Stephan on that, because if I look at barriers, 4 things I've taken away from the conversation so far as barriers. One is privacy, GDPR. One is reciprocity, giving access to somebody else's data in exchange for getting access to their data, mean it financial services, non-financial services, or whatever. Liability, Jeff mentioned that, chains of responsibility, and incentives, which Mounaim mentioned. So I see those as barriers, but then there's also kind of building blocks. And when we spoke beforehand, Stephan, you made a really interesting point that one has to differentiate between different types of data and different users of data as well. So maybe over to you. You've looked at some of these ideas around building blocks. How are you approaching that from the German perspective as part of your initiative?
Yeah, you're completely right. Those topics have to be considered. Let me come back to these 4 points you just mentioned. It, in fact, depends on the kind of data which you want to make accessible. That is the first point. You have to differentiate between regulatory data, which of course can only be used in the legal context, in which it is acquired by the supervisory institutions. That must be regarded. And the question is on which level, aggregation level, you can use this data for commercial, for academic or supervisory questions. And this example brings me to this idea of a matrix model, which we would like to apply to a data hub. That means we differentiate between data, supervisory data, academic data, or commercial data. And on the other hand, we have to differentiate between the users, commercial users, academic users, or supervisory users, public users. And we will, the core of such a data hub will be a mechanism by algorithms, but of course also human supervision, to find the correct legal context for each application where you want to match two data blocks. This is one of the core functions you need to install, because each data request and data interconnection between two blocks will have specific and individual legal contexts. That is about privacy. Then the second, reciprocity. The topic about reciprocity is that such a data hub should be constructed in a way that, of course, it is working like an exchange, that two sides can enter and combine data, and of course it can also maybe offer specific data which it holds already as a data space. But the central idea is to bring two parties or several parties together to combine data for a big data analysis. Liability is a central topic because, of course, if there are such many levels of legal requirement to be met, it is the question who is in charge to be liable if it comes to a violation of legal standards. Of course, in fact, in the end, it must be the two parties who are advised, who receive interfaces and all the instruments to modify the data in the way the legal context requires it, and bring those data together. And for very delicate topics, of course, you will see that we maybe need to leave data where they are and apply modern analysis like federated learning, where you can apply AI models and data can remain in the hubs of those who want the data to be analyzed. And finally, incentives. I think it's very clear. Incentives is, let me see, two aspects. Of course, I mean, if there are two interested parties to join in and make a big data analysis, it is very clear that they both have an incentive. We see more and more legal requirements, like, for example, the latest ECB publication from November 2020, requiring banks to use more and more data and make a risk modelation on sustainable finance and sustainability risks. And that means the whole financial business becomes more and more data-based. And if we consider that, I've seen publications that, for example, in the sustainability area, 90% of data for the moment are not empirical data, but so-called guessed or appreciations. Yeah, we see that there's a huge need of financial institutions to gather and combine data. So there are many incentives for financial institutions to bring data together. So to wrap up, I think the core to overcome these very different legal topics is to really build a function within a data hub that analyzes the individual situation and via algorithms and modern tools makes data fitting for those purposes. This is a very difficult approach, but I think it's the only one, because I agree that it is such a huge political challenge to have a globalized standard in the world. We don't even see that with financial institutions in Europe or supervisory institutions in Europe. So this is a very long way. And in the meantime, we must find such approaches to make this way accessible.
I think it's very interesting what you're saying, Stephan, because effectively you're considering different levels of cooperation within a data pool or data space, between publicly available data and publicly shared data, between individual parties sharing against contractual arrangement, or interaction between more sensitive sets of data, so that there can be different forms of collaboration within the same data space. And I think that's a very interesting concept. I think the same question to you, Mounaim, because I want to bring now back to the kind of consumer side, because you've been thinking through, in the context of the implementation of the PSD, around issues like legal challenges, also liability, authentication, authorization, operational aspects of making APIs work, and I guess many other issues. What lessons have you learned from that? If we want to roll out open banking to open finance into other retail applications, or if we want to look at it from a more holistic perspective for, let's say, non-financial data, or the mixing between financial and non-financial data?
Thanks for that question, Nick. A very broad question. I think the most important learning from PSD2 is that technical standardization is not enough. I mean, with PSD2, we had a directive and we had regulatory technical standards. Even if you put those two things together, it was not enough to establish an ecosystem in which you could realize digital transaction services driven by all this financial data at scale. Simply because we need more types of agreements in order to make these services a reality. And as financial professionals, we knew that because we have established payment schemes across Europe quite some years ago. So we actually knew what was needed, but still for PSD2, we did not manage to bring all those capabilities together to actually create an ecosystem to realize that. But maybe apart from PSD2, if we just look at what you would need in order to realize a data space, it's basically two central concepts that play a role there. The first one, I think Coen mentioned it before, it's data sovereignty. It's basically the ability of an individual or an organization to exercise control over their data, be it personal data, be it their business data. And it's not only a legal right to have that as enshrined in GDPR, but it's really to have the tools and the mechanisms to exercise that control. The second concept is what we refer to within Innopay as a soft infrastructure. That is basically the way to realize data sovereignty. And that is a set of agreements that enable any-to-any accessibility. And that soft infrastructure covers all kinds of agreements around business matters, including user experience, for example. It includes legal agreements around liability, for example, operational agreements and service level agreements, functional agreements about the specific functionality you try to enable, and last but not least, the technical means to enable that functionality. And here in Europe, that soft infrastructure obviously needs to be based upon European values and around solid consent mechanisms that works for every entity, be it an individual, a business, or a government. And if you have that soft infrastructure with that set of agreements that I just mentioned, that basically sets you in pole position to organize interoperability, trust, and governance of any data space, be it a financial one or beyond.
I would like to maybe just close with two final kind of comments, one from James, and I would like to close with you, Jeff, if that's possible. So just reactions, thoughts to what you've heard. James, over to you first.
So I think, look, I mean, there's been a lot of helpful discussion today. I think there's two things to start with. We should decide whether we're building for specific goals with this data set, so sort of CFT, AML, etc., or whether we're taking kind of build it and they will come type of approach without any sort of main focus, general data, and then people can use it for what they will and innovate. That, of course, begs the question, well, what data do you pull into that space? Because you don't know what you're trying to do it for. So I think that's the question. Then, so once you've worked out what the data is for, think about the design of the data set, you know, to meet those benefits that you've set out. That then takes you into the architecture. Are you going central or federated, as we discussed today? And that also then requires you to think about how are you going to reach standardization. It's easier if you centralize, a lot more difficult if you federate. So I think those are the questions that really need to be thought about. Are we going narrow or broad? And then what flows off the back of that would be my approach to sort of thinking about this problem.
And I think that very much speaks to Coen's point. First, decide the problem you want to solve, and then think about how best to go about it. And it speaks, I think, also to Stephan's point about a space can have different forms, shapes, and arrangements depending on the use case. Jeff, looking in on Europe, I always like having somebody on the panel who looks in on our own debate. How do you see that, having solved it or trying to solve it through a self-regulatory approach or industry cooperative approach rather than through detailed regulation?
You know, the interesting thing that struck me today, listening to my co-panelists, is we're still talking about what is financial data. And after all the years, we're having that debate here in the US. We anticipate our regulator, the CFPB, is going to expand the definition of financial data when they get done with their regulations next year. And so that is a fundamental question. How do you resolve everything else unless you don't know what financial data is? And we, for example, are concerned that is personally identifiable data financial data? Is it data? If you can take data, even if you anonymize it, and it then gets sold downstream by users, and yet they can then cobble together other information and re-identify the clients. Well, that's a real concern that we have. And so we're talking here about that risk. Now, I know Europe has a comprehensive data privacy regime, you know, GDPR, and we have California, which is very similar, and that's spreading across the country like a virus. But our problems are, where do you bump into privacy and rights versus what is financial data? So I think that that's something that we haven't resolved here, even though we have much experience in developing standards and trying to move forward in an organized way.
On your point on data, I would say the problem is not data privacy, but the multitude of authorities that define it all in a slightly different way, which causes the biggest problem in Europe. I can say that as a German, but because we've got 17 authorities ourselves in one country. I think maybe Alain, I should pass over to you. Maybe any last thought, and then we close the panel. Any wisdom that we've passed on to you for your work?
Well, the first comment I'll make is that I'm, from my narrow little corner of the world, I'm very happy that I don't have to deal with privacy or GDPR issues, because all of the data that we're dealing with is already public. So the only thing is we're just federating data that is already in the public domain. We're just making it easier to access. So that's not particularly a problem, I hope, that I have to worry about. More generally, I think there have been a lot of very good points. I very much liked James's point about talk about open data, not about open finance. And it's true that you can get into sort of theological arguments about what is financial data and what is relevant for the financial sector, and people use all kinds of stuff, whether it's geoimaging, geospatial imaging, cell phone traffic over particular areas. So there's all kinds of data that people use to make financial decisions, right? And as I also mentioned, there are of course interactions between the data that we talk about or that we will consider in the context of the SAP and the data that is relevant for the European Green Deal, and that there might also be links between the European financial data space and the European Green Deal data space. So these are all things we have to consider. I fully agree that we need to keep a fairly open mind and try to not recreate silos through these initiatives on creating sectoral data spaces.
Thank you. I think that makes sense. I could make comparisons to the benchmark regulation or alternative investment fund directive, where we try to define what is and what isn't financial data, and this led us into all kinds of difficult debates. But I think with that, I would like to thank the whole panel. And Coen, thank you for kind of kickstarting this distinction between different use cases and kind of personal versus non-personal data. I think, thank you very much indeed.